Hello folks, this is Naeem Aslam, Chief Market Analyst at AvaTrade. Welcome to our daily fundamental video analysis. Reopening of economies has spurred the biggest rally for the European markets that they have ever experienced during the month of May. As you can see in the chart, the DAX index has already recovered more than 50% of its losses. Now, of course, there were extensive losses during the month of during March because of COVID-19, so a rebound was expected. But most of that rebound has happened during this particular month, especially for the European indices. But this isn't the case for across the board for all of the, for the rest of the European indices, because the price action looks still very abysmal for the Footsie MIB. As you can see in the chart, the Footsie MIB still has a lot more room to recover in terms of its losses. But what about the geopolitical situation? That is something enormously intriguing, because Beijing has passed just moments ago a legislation which it will allow it to impose new security law in Hong Kong. And more interestingly, last night, the US Senate also passed a legislation which is going to impose sanctions on China. Remember, yesterday we talked about this particular element that China isn't really is going to defy whatever the US is saying. It's not going to respect it is not going to back down to the threats of sanctions, and then that is what really happened now. The next important point is when the US imposes sanctions on China, it isn't going to sit quietly and turn the other cheek. It is going to come back with a retaliation, just like what we've seen during the US trade deal. And speaking of the US trade deal, given the fact that China has passed its legislation for a new security law, US has passed its legislation to impose sanctions, the US trade deal, which sits in between that, which was forged after enormous pain that both countries suffered last year, is again at risk, because China can easily say that it is going to pull back from that trade deal, and of course the US can do the same as well. And who is going to be impacted by this? Of course, the global economic growth. Now, in terms of commodities, the price action is quite intriguing when it comes to WTI, because the price did cross that level of above the level of 34 on Tuesday this week, but now prices have started to ease off ahead of a OPEC's meeting, which is in 2 weeks. Now, of course, Mohammed bin Salman, the Crown Prince of Saudi Arabia, and Russia, they talked yesterday, and then they've talked about easing. Perhaps there's going to be some easing of the production cut. Remember that during this pandemic time, they've reduced the production from 13 to 14 million barrels per day. Now, of course, some of that burden was carried out by the US shale oil crude producers in between 3.4 million barrels approximately. But now, if in 2 months' time, they start talking about that, okay, we can ease off some of that production cut, or how we curtail that supply, that means excess supply is going to come on the market. And this is intriguing because later on today we also have the US crude inventory data, and if we've learned anything from during the past few weeks, the actual data has been trending much better than the forecast. But now, as of today's forecast, the number is for minus 2.5 million. If you compare that to previous week, that was as minus 5 million, right? So obviously this number is moving in a positive direction, and this comes at a time when oil prices are already between $33 to $35, depending on which contract or which oil price you look at. So this brings this question that where oil prices are going to move next. Of course, I've done this extensive research, and I'll put out a full fundamental analysis on our website, which I recommend you to go and read that, because there are some really important nuggets for you guys to understand and educate yourself by reading that analysis. But as always, you can protect your upside and downside position by using AvaProtect. That's all for today. See you guys next time.